Welcome back guys, Harry here, known as Tradesharpe. In today's video I'm gonna talk about my strategy towards trading the London session. Now I'm a London session trader because it fit my time zone perfectly. I prefer to trade in the morning and then get on with my day, but London session is not the easiest session to trade and it's not the most popular. The most popular to trade is the New York session. The reason why is during New York session, not only do we have the NY banks open, we have the London banks that are still open, so you have many chances to have volume times and many chances to look to achieve different certain moves in that session. So when it comes to London, the dynamics are slightly different and we see something a lot more different during London session. Second reason why I really enjoy to trade London session is because of the lack of news. New York session seems to have a lot of news and that can sometimes distort your trading, and you have to be a little bit careful when the news comes out and look to trade after news. And also another reason I like to trade London session is because if I don't find a trade in London session, I have New York as a backup, and that's really nice opportunity. And now I'm going to jump on the charts and I'm going to show you guys exactly the difference between trading London and trading NY and how to approach the session to make sure that you are profitable trading London no matter what pair you are trading. That being said, let's get onto the charts and talk about the key attributes of trading London session. Before we guys start, you know the drill. If you're enjoying this content, please do the YouTube business by leaving a like. If we can get the likes up to 500 likes, I really would appreciate that. Definitely does help and supports the channel and show me you guys are liking the content. If you also do like the content, leave a comment down below. Remember, I will not DM you first. I will not do any of this. All my official links to anything that I offer are in the description. My official Instagram, drop me a follow there for all the short form content and just to keep updated, and all that stuff is in the description. To my free group and stuff, even if you do join my free group and some random person you DM'd, just ignore them. Anyways, all of that out of the way, let's get into this video. Alright, so we're here on the charts here, and this is GJ, the pair that I love to trade during London session, as many of you may know. And the first thing is, let's talk about pairs. So during London session, you do want to trade a pair that is going to have the majority of the volume brought into London session. And in this case, it's going to be pairs with GBP. Euro is also fine, but anything where we're using USD, anything where we're having something like gold and stuff like that, and US 30, Nasdaq indices, this is where you might see some inconsistencies and where it might be seasonal. And what we notice is that hedge funds and major funds, they normally rebalancing portfolios and they go hard in February, March, April. So even in London session, we do see better moves on those compared to later in the year. Whereas New York, there's a consistent volume because of all of the different factors of having NYSE always being traded and the London New York crossover and all of that stuff. So we generally see more volume in indices in New York, and that's where the majority of their time they should be traded. Whereas London session, you want to be sticking to mainly pairs with the GBP and the euro as well, if that's something you're interested with. But for me, I found GBP JPY a very interesting pair. Reason being is GBP is a strong currency, of course, in London session being the main driver, and the JPY had just traded overnight in the Asian session. And on top of that, the JPY is a safe haven currency, so acts very interesting. Kind of acts a little bit as gold, where gold is also seen as a safe haven asset. So we get that sort of volatility in there, hence why I love to trade it. But let's go ahead and talk first about what is the different dynamics between New York and London session. The difference between New York and London session, the main difference is that in New York session, you already have had a volume time. So what that means is that we have traded London, and London had ideally brought volume into the market, which means that New York is starting from a standpoint where the market has had movement during the day. Whereas in the majority of the time in London, we are going over the slowest session, or we've just passed the slowest session, which is Asian session. So normally when we start London session, we're starting from a ranging perspective. Price overnight has created a range, whether that's between 2 points, whether that's inside of another range. But normally when we start London session, we have identified some sort of range, and we have had the higher time frame candles, including the daily and the 4-hour candles, build us the first idea towards the day. And that's why I use the daily and 4-hour candles to give me an idea of what London session should do. And then more going into New York, you can use the rest of the daily and stuff like that. But understand, we're coming from a time of low volume. The second thing is, since London session, it's kind of a session where it's the first volume of the day, or the first real volume. We do sometimes get crazy Asian volume, but it's not as consistent as London. You have to understand that the major trend here with London session is identifying what direction makes sense. Whereas in New York, you could normally have a mixed bias where you can look for buys above a certain zone, sells below a certain zone based on how price action has developed. London is a session where you really want to be sticking to one bias, and the reason you want to be doing that is that people will trade London as a breakout trade and normally get stuck in fakeouts, and the reason they get stuck in fakeouts is because they're not identifying bias and they're not able to trade also within this range, because these ranges could be up to 30-40 pips, right? Even more if you want, and that is tradable. We could trade from bottom of ranges to top and from top to bottom depending on what bias. So I recommend all of you go and watch my session bias video. This will help you a lot in trading London session and is very, very important. But understanding that we come from range, also the main key factor here, which is the majority of this video, and we'll go scroll to a random spot and look at an example, is that in New York, since you have NYSE and New York Open and London crossover, you have chances to take buys from a certain zone, which could be a certain type of trader's trade, or maybe during New York it could reverse completely and you could be looking for sells and then you get another trade. So there's multiple options in New York for potentially both directions, or potentially continue in one direction, especially if you were to cross and look at assets like gold and we bring back sessions. You can see how basically pre-New York can give you buys and then NYSE can come back down to the bottom of the range. Here, look, this is beginning of New York, gives you sells, and then towards NYSE starts to give you buys. Similar thing here, can take buys beginning of New York, and then these sells end up playing out, which is basically a deeper liquidity grab, and then you can see the majority of the buys play out in NYSE, and you can see the difference between London range, New York big moves. Again, here in London we did get some continuation, but if you were to do some measuring, and this is gold, right, it's 50 pip move in London compared to New York, start of New York, which is 150 pip, and then NYSE give you another 160 pip move. So you can see the difference there, right? You can see the difference there. Again, London more of a range, boom, easy buys, close above the high. New York give you that continuation. So that is where I'm telling you that for indices, for commodities, New York could be better here. And in London, you have to be very careful and understand how to trade London with these certain pairs and understand the seasonal shifts. But if we move over to something like JPY here, and we scroll to a random data and see what we got going on, how in London session here, we're getting the continuation of move. New York gives a reversal. So that's the opportunity for two directions here. Session bias coming into London, bearish, London gives continuation. Same thing here, session bias, 4-hour supports created here. What is London giving? Continuation, pullbacks for continuation. That's what London did. New York continued the move. So sometimes what's nice is that in London we can get continuation and then it pulls back for New York, so you can trade. So that's what I mean, you have a double opportunity here. But what you're noticing in London is this is the biggest trade. In New York, you see you can have both directions here, sometimes here as well. This is a prime example. You see London comes pushed down, New York pulls back, and then New York gives continuation. But in London, you're trading all the way up from here. Even same thing here. London gives continuation down towards the end of New York, reverses. Here again, London coming into London, boom, nice move down. So the trait you're noticing, and then New York range, that is the inconsistency. Why in London you can see we have these one moves, and this is the biggest point here, is these one shot moves. Look at this, London easy move here, London easy buys above here. And that's my point, is what I want to talk to you about, is that even though in New York you can have these erratic movements of changing direction, because normally in New York you are ending up in a mixed session, in London you have one volume time and you have one shot. So when you're trading London, there's only one move, and that's the move. If you miss the move, you can't go chasing moves, because now you have to wait till New York. So you basically have one shot during London, and that's the most important point I want to talk about, is how when you're looking to trade London, we want to trade the volume time. So the volume time in London is going to be basically 1 hour before and 2 hours after. So whatever movement happens in that time, if you miss that initial move, then you're gonna you've missed the London session. That's it. Don't go chasing moves. Don't try buy highs, sell lows. You're probably gonna get stuck in a post-London range or a different direction, reversal change of direction for New York. So this is why in London, the key point to trading London is being accurate with your pre-market analysis, being accurate with your session bias, choosing a direction, and when the option presents, pull the trigger. Because if you don't, and you already are trying to to chase after a big move, because like in New York, you saw in New York, when I showed you on gold, there's like 160 pip move to the upside, 150 pip move to the downside. You have options, but in London it's like boom, find the session bias, that's your one move, be done with it in the day. And that really is where I have that rule that I talked to you guys before, which is volume times X push, right? So this is the formula that I did put up in a different video. And if you guys know, you know, leave a like. If you know, let me know in the description. But this volume times X push formula basically means in our volume time, how much has the push been? And this is how to avoid fakeouts. And if the push has been too much, then you're probably gonna get caught out in a fakeout, and you're probably gonna lose the trade, because in the volume time there's been too much of a push. And that equals now to basically, if this variable is higher, if there's been too much of a push, then you basically miss the move. And that's the number one key thing for trading London session. And that's my strategy for trading London session, is I need to pick a direction. I need to make sure that you have one chance to pull that trigger, because that's when the volume's going to come in. If you miss that volume window, and if you miss the setup, then you can't go chasing other trades, because that's where you're going to get stuck in the inconsistencies. And that's where London can also become hard, is because if we go into a period where London is not having volume and you pull the trigger and the volume does not come, that is where you're going to see inconsistencies. And in those periods, the best thing to do is sit on your hands and you know, or have New York as a backup and wait for the volume to come back in, and then you catch the easy move. So that is basically what all I have to talk about here about trading London session. It's a few tips here, but this is some key tips that I wanted to talk to you guys about trading London session, and hopefully this will help you well while you guys trade London session, or if you do trade London session, to understand its characteristics a little bit better. Let me know if this video helped, and as always guys, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.